Hello, viewers, students, and friends. This is Dr. Kashinath Neharkar, Assistant Professor, Shri Shivaji Law College, Parbhani, and I welcome you in my YouTube channel, Law Education Volunteer Dr. Kashinath Neharkar, at lecture series on income tax laws. Friends, in this lecture, we are going to discuss the concept of exempted income under Section 10 to 13 of Income Tax Act 1961. See, friends, while computation of income under each head, certain incomes are not included into the total income of that person, and such incomes are specifically mentioned by section 10 to 13 of Income Tax Act, and these incomes are called as exempted income or exemptions under Income Tax Act. So friend, let before commencing today's lecture, please subscribe this channel and press bell icon to receive further notification. So let's start with today's lecture. Friends, these exempted incomes are provided to provide relief to person to get benefit against those necessary expenses. So these incomes are exempted due to its need as a social necessity or public policy, etc. There are different reasons why such incomes are exempted. You can find while going through the income under each section, you can find what is the reason why the exemption is provided. So you must keep in mind that while computation of total income of person, the incomes which are specifically mentioned under this chapter, specifically from section 10 to 13, these will not be included into total income. So this will be excluded from the computation of total income. So this is very huge chapter in Income Tax Act, and we are going to discuss these exempted incomes under some parts. So there will be few lectures concentrated on this chapter, that is exempted income. So let me see what is the concept of income. Friends, this chapter is known as income not included into total income. This is also called as exempted income. So the Income Tax Act 1961 enumerates section 10, and which provides the items which are totally exempted from the tax. So while computing the total income of previous year, any income which falls under these categories, under these sections, will not be included into the total income, and that helps the individual to keep his tax liability as low as possible. So section 10 to 13 of the act deals with the exempted incomes. So let me see which are those exempted incomes which are provided by section 10, 11, 12, 13. And we are not going to deal with all the exempted income because it is not possible to cover each and every income which is exempted, but we are going to see some prime incomes or some important incomes that are exempted from the tax liability or that are exempted from computation of total income. So firstly we are going to discuss exempted incomes under section 10. So let me, what is first kind of income which is exempted from the tax, and this is agricultural income. See, section as you know, 7th schedule of Indian Constitution, through its list, it provides subject matters on which the tax can be imposed, and union list provides entry number 82, which gives power to central government to impose tax on an income other than agricultural income, and that is the reason why the Income Tax Act 1961, it cannot impose tax upon agricultural income. So the person who gets the income from agricultural activities, this is totally exempted from the tax. But there are some certain exceptions where the businesses, poultry businesses, etc., these are included for the taxation purpose. For that purpose you have to go through section 10 subclause 1 which specifically provides what is agricultural income, which are those activities which are called as agricultural activities, and which are those activities which are excluded from that. So but basically you must remember that agricultural income is not included into total income of person. It means this is exempted income. Then second income which is exempted from tax liability is the sum received by individual from HUF income. And see, the person may be Hindu and member of Hindu undivided family. So in case where any person receives any amount from the Hindu undivided family of which he is member, in such circumstances what the amount he receives from that Hindu undivided family, it is exempted from the tax liability. That will not be counted at the time of calculation of his tax liability, and this is done to avoid double taxation, because he has received the income from the Hindu undivided family for which the Hindu undivided family has already paid the tax. So this is the reason why the sum received by individual from Hindu undivided family of which he is member, this is exempted. The next exempted income is the partner receiving share in a profit of total income of firm. See, partnership, this exemption is related to the businesses which are conducted in a partnership firm. So where in a partnership firm, when the person receives profit share from the profit of that partnership firm, then that will be exempted, because that partnership firm itself is a person who is taxed, who is considered for the taxation. Its income is already taxed, and then what remains with that partnership firm as a profit, that will be distributed among the members of that partnership firm. So that will be exempted from the tax. Then next is any income of non-resident by way of interest on securities, bonds, etc. So non-resident is given some relief for the purpose of investment here. So if any non-resident of India invest in securities or bonds which are specifically notified by central government, then his income which is received from that securities as an interest will be exempted from the tax liability. Then next exempted income is the value of leave travel concession received by employee from employer. This is also exempted from the tax, but for that purpose the exemption is limited up to the actual expenditure of such concession, or what is value which is given by employer to employee. See, this is given as an encouragement, because you know in industries the employer gives traveling concessions to his employees to encourage him to work more betterly. So that is a reason why this is the amount which he received from his employer in addition to his salary, but this is given him to as a traveling benefit, to travel abroad the India to enjoy holidays, etc. That is the reason why this amount is not considered as the income of that employee, though he receives from employer, but this exemption is exempted only up to the actual expenditure which is made by employee. The next exempted income is a remuneration received by non-citizen of India as an official of embassy, high commission, etc. As you know, in every nation there are embassies which works as a representative of that nation. In India also there are many embassies from different nations. So when any person appoints their own citizens in an embassy in India, the income of such person, though he stays in India, will not be taxed. That is exempted from the tax liability. Then allowances and perquisites paid by Indian government to Indian citizen outside India for rendering services outside India, this is also exempted. Say, because that person has to give certain services, Indian person is giving certain services to Indian government outside the India. So such whatever the amount which is given by Indian government to Indian citizen for rendering certain services outside India, that are also excluded. So there are certain criteria. If that person satisfies this criteria, again such income will be exempted. Then next exemption, exempted income is any death come retirement gratuity. See, friends, you know what is the concept of gratuity. Gratuity is nothing but the gratuitous payment made by employer to employee for his meritorious service. So this is given an award to him. So this amount is also considered as exempted income. But the exemption is limited up to certain limits which are provided by section 10. See, there are two categories for the exemption purpose. First is the death come retirement gratuity, which is received by central government employees and state government employees, and in their case, whole amount is exempted. Whatever the amount they receive, whole amount will be exempted. But in case of other employees, private employees, etc., or who are non-government employees, in their case the amount of gratuity up to rupees 10 lakh is exempted. So if that amount is more than rupees 10 lakh, the upper amount, the amount which is above 10 lakh, that will be taxed. So only up to the rupees 10 lakh that will be exempted. Then next exempted income is the payment in commutation of pension. This is also the exempted income. See, when person retires from the services, that person gets the pension, but at that time there are certain provisions relating to commutation of pension. Commutation of pension, it means you have to sell certain portion of that amount to government. So commutation procedure is there, and that person, after selling some part from that pension, because at the time of retirement, if your salary is rupees 1 lakh, you cannot get the 50,000 as a pension, monthly amount as a pension. But before that, before calculation of your monthly pension, you have to sell some part of your pension to government, and you will get the lump sum amount for the sale, and this process is called as a commutation. So in such circumstances, whether that amount is taxable or not, that is considered by section 10. And in this case, the payment in commutation of pension, if it is the amount which is received by central government employees or state government employees, whatever the amount it received by that employee is fully exempted from the tax. But in other cases, and in case of private employees or non-government employees, if that person receives gratuity in such circumstances, if that person has earned benefit under earlier section, that is any death come retirement gratuity, in such circumstances, 1/3 amount will be exempted and 2 parts of that amount will be taxed. So what that person receives, the amount, that will be divided into three shares. So among these three shares, one share will be exempted and two shares will be considered for the taxation purpose. This is in case where that person receives gratuity. And if that person do not receive the gratuity, and if that person has received commuted pension at that time, then the half share of that amount will be exempted and half share will be considered for the taxation. So friends, this is the first part of exempted income. Then let we meet in next lecture on exempted income. So friends, thank you.